are going to be longs for now. So every time we get retracements back into points of interest, I'm going to be looking for a long setup, unless um, let me go to the daily. I just started recording. So back to the beginning real quick. This swing right here, these candle bodies, close below. And so this is where we'd want to see an immediate rebalance back up into this weekly order block. And here's a daily fair value gap. So that's the current analysis right now. Let's get rid of this. So then we move to the daily. Okay, so we took out we had that 150.20 that I was talking to you guys about, where we just got the IOFED, where it was the 4-hour equal lows. Okay, and back down into this order block. So we look at this order block right here, and price had come down into it and really ran up. So we're not showing a willingness for price to break through here right now. And so here's that daily fair value gap. So this will probably be the first hurdle, as this is showing a bearish order block. And we've seen price come back up into it and reject. But I would like to get one more entry into this daily fair value gap. And similar to almost like a 2022 model, except we didn't create the higher high. But I want to say on, this is YM. I thought YM created a higher high, maybe not.
Yeah, YM kind of created that uh, failed swing there after making a double top.
So yeah, so we have these candle bodies, and these candle bodies ran these candle bodies. So this is a run on liquidity right here.
Mhm.
And then we had an immediate move away, and now we're getting almost the rebalance of YM right here. And it's just kind of in this consolidation point. So that's kind of what I'm looking at, is taking longs into this daily fair value gap. We'll see how price reacts around this, and we'll see the next couple days. We could very well um, not do that, and then we would see like subsequent price action, like another or like this would be another order block. We would see more down close candles targeting the liquidity below us. Um, but I think because we're still kind of early in August and we have September into October, we could get just that swing back up here and then kind of move down here as we've created this short-term sell side liquidity all right here again. And if you look at the candle bodies, um, these candle bodies right here, these were equal with these candle bodies on the daily. And then now we have this candle body that broke that. And we have a daily up close candle so far. Um, so that's kind of my higher time frame thesis. That would, to me, that'd be like the higher probability. If we go down to the 1 hour chart, what I was posting and talking about 1 hour candles and looking at setups. So there's a few setups on the 1 hour time frame, and it kind of comes in a few different forms. You have like a 4 candle setup, you have a 3 candle setup, and this was a perfect example of a 3 and a 4 candle setup on the hourly. Okay, so if we just see. Let's do this real quick. Okay, we're just going to take the wicks off. Okay, so forget about the wicks for now. We want to look at and study the candle bodies. So you can see all the swing highs and lows on the hourly chart. You can see when price actually takes out liquidity with the candle bodies. You can see where equal highs are put in with the candle bodies. And you can see a couple different patterns as far as 3 candle bodies. Here's 4 candle bodies. And this kind of like tells the tale of where price is going to go. So you have a swing high put in here, and we have a run into an internal liquidity into a fair value gap. And if you look at all these candle bodies run out all this. And then you have your subsequent price action, which is also rebalancing this as well. And you have this four candle setup right here. So on the hourly, we'll throw the wicks back on. A couple things you're going to see is depending on how the bodies form, you have this right here where you're going to have one candle that just kind of holds in the next couple candles, and price really shouldn't break above this high, and it can either be like the second or the third candle. And if you back test this, you'll see this. Um, the one that I feel like is like highly probable is this setup right here, and it's where you get the 4 candles. Remember we talked about kind of this when you have like this square setup, it's a change in the state of delivery. So typically on the third candle, one, two, three, four, this third candle, the wick on the third candle, when it if it holds in any wick on this fourth candle, that's a sign that you're going to go and hunt opposing liquidity. And then as you see, we have candle body highs, a swing high. These are candle body highs. And what does it do? It rockets up and takes out liquidity. And then here's your move back down to midnight open, which is right down here. And now we have this swing high. And if you look at the candle bodies, this is taking out these candle bodies right here. Now this is a nice hourly candle, kind of wicks out of this fair value gap. This is the swing high that I would be hunting. So I would like to see price run above here, which is at 152. If you the standard deviation from Asia is like 175, so it could maybe go a little bit above into this fair value gap. We'll see. But this is the level that I'm hunting based off of coming from this point of interest where price has failed to break through again. So this is your failure swing. And then ultimately on the 1 hour, we have relative equal highs of the candle bodies. So that also kind of aids. Harris posted on the 4 hour chart, you have all this liquidity that's been sitting up here. It's been manufactured. And then we came down to a higher time frame point of interest. And so this would be good targets. We'll go to another example. And you can see this all on um, on like every time frame basically. So like if you look at this little area right here, Asia, okay, 2 p.m. or 2 a.m. What do we get? We have a three candle setup where this middle candle sets a wick that's gonna hold this next candle. You have a swing high right here. These candle bodies are taken out by these hourly candle bodies. And then what do you have? What's your subsequent action? This swing low, this candle body, these right here take this out. And then what do we have next? Equal hourly candle bodies, and boom, it drives, and you have equal, couple of equal hourly candle bodies. So you can take this into any part of the session, um, and having your hourly chart up should give you confidence as to when you see this and you see a wick down, then you start adding confluence like, oh, well, here we have like an order block. Okay, so we wick out the order block, and then this next hourly candle wicks up above the body, and then you can start like you could highlight these wicks in this area and then go to your smaller time frames, your 5 minute, and start looking for bearish PD arrays to form. And you can easily hunt. You can go back to like hunting areas on the wicks depending on what, like all our London traders. If you guys are getting in the market right around here, you got your 2 a.m. drives up, and then 4 a.m. open, and then starts hunting liquidity in London. Um, Here's another good example of 1 hour candles that are equal lows. Okay, we never mind the wicks, but the candle bodies are equal. And we just have a run up into the order block, but price dives down and takes them out. And so that's the candle body run on liquidity. Here we go, another 4 candle setup. Okay, 1, 2, 3, 4. This third candle wick holds the fourth candle's wick, and now we have price running out again, another set of pretty much equal low candle bodies. And this is your New York Open. So we got a change in the state of delivery. And again, 2 candle bodies. Here's your second run on liquidity. Okay. So once you see that these bodies formed and this body forms right here, and we have this wick and this body formed, we can start hunting um, bearish setups. I'm sure this was a run on liquidity from somewhere left, but this is your 2 runs on liquidity. And so that's again why I like kind of the 4 candle setup. To me is a very like highly probable setup. One, because you're getting 2 runs on liquidity, and probably another higher time frame run. And then you get your 2 runs on these candle bodies right here, one on top of another. And it's showing a change in the state of delivery. And so now it's just an easy hunt for where's the liquidity below. And you see we get that 2 p.m., 2:30 kind of retraces and then comes back down. But nice targets right down here. Here's kind of here's like a 3 candle setup, and these kind of vary a little bit. I haven't done as much back testing, but here's your swing high of the hourly candle bodies. Okay, this wick, yes, it runs above it, but where is that candle body? Oh, it's way down here. Okay, so we want to see hourly candle bodies take out other hourly candle bodies. And then SIBI, order block, that gives confluence. And then this 3 candle setup, this candle body just comes above this one. just barely. You got a long wick, so then we can start hunting uh, setups all within here. So as soon as this closes, we'd want to take a look at how price action has delivered. And then as you can see, we get a nice run and you have these hourly candle bodies and you can target these wicks, but you can see that this candle closes below these candles. So it just purged the liquidity right there. And then we also get subsequent price action to where we take out these candle bodies as well. This one was a little interesting. I don't think there's very many of these, but you had kind of this like change in the state of delivery that runs these right here, and this actually gave like a really long wick. And typically, the fourth candle will stay within that third candle's wick. So this was kind of like an outlier. Um, but we'll take a look at like more examples. Usually the fourth candle that starts to draw up that actually gives the move. Let's find another one. Usually is part of the bigger move. So you're almost like getting in right when you have a low resistance liquidity run. There's kind of like another one of those where it had the wicks were equal, but it kind of forms that square bottom. So here's
And obviously, y'all would want to use this type of pattern in conjunction with like the, high probability time frames.
yeah, like everything. It's not like a. There's nothing black and white about um, trading ICT and all this stuff. Like as you guys seen, like oh silver bullet. There's gonna be a silver bullet, in you know every time somewhere after 10 a.m. Well, it's like no, not all the time. There's some really easy, good-looking ones, and there's sometimes during that time period, if we're in a point of consolidation during that time period, because Asia and London expanded, you're not getting that silver bullet. So it's not nothing's like a black and white. Um, you got kind of like equal candle body lows. You can see that that price is really holding right here. These candle bodies don't even break these candle bodies. So you want to see where candle bodies close at. So you can see that this candle body isn't willing to break below here. So that means price is looking to move up. This is also on the contract. So some of these might be a little bit different than the continuous. I did all my charts are off the continuous. I just have my continuous really marked up right now, so I didn't want to erase that just to be able to give you guys a cleaner look. But here's another example that when we've ran this and then here's a swing low on the hourly. Okay, price is holding right here, so it doesn't take out these quite yet.
Yeah,
Swing
it's just
low,
like a
swing low.
standard return to the order block.
Yeah, it's that rejection block down here. So it's like here's a rejection block. So here's kind of nice on the hourly. This swing low is created with the wick, and then here's your rejection block in there, and then you can see candle bodies don't even come close to touching this again, but they return into there for as the order block, rejection block, order block, really nice combo. So then what does this do? This creates a change in the state of delivery back in this rejection block.
Oh,
and then you have 1, 2, 3, 4. We should be getting ready to see price move up and holds within this wick, and then it runs out these highs right here. We get a nice rebalance, and then price starts making its way up to eventually run these highs. So,
right in the failed swing.
yep. So that was the engineered liquidity put in with the failure swing, the rebalance back into a rejection block. So when you see this stuff, also again, because the like when there's a 4 candle move, it typically presents with a bigger run because this is like you're changing the state of delivery on a higher time frame. And this is why I propose studying this setup first. So as traders, now we're looking at, okay, Thursday, Friday, Monday, we're looking at every time price goes short, we're looking to get long and we're targeting these points of interest. So that helps give you the narrative for when you go into the next day, Friday, because price is going to do what it does. And we get into Friday, and what do we get? We get a retracement, lunchtime retracement, immediate rebalance. Okay, like ICT talks about, you get this immediate rebalance, and then it's going to start running up. Afternoon session here really doesn't make
I
the
think
move,
that's yeah. I think that was Sunday, Monday. Yeah, I just consolidated two close on Friday.
but going with your narrative, okay, we didn't take this out yet,
Hmm.
creates these equal highs, and then again, the candle bodies, okay, these candle bodies were taken out, but these candle bodies weren't. So price is still going to hunt this even though we wicked up there. So that's your
Well, and I think the what supports that is the fact that that original order block area, the triple bottom, and then where we created order block goes up, creates the failed swing, comes back to the order block again. When it expands a second time, that's a propulsion block.
hmm
That's what's giving you the higher time frame narrative to say like, okay, this thing wants to keep going up, as opposed to just taking out liquidity and coming back down again.
yeah,
That's like a telltale.
yeah, your order block propulsion.
Well, and then that whole price action right there on the 8th was kind of like the creation of a propulsion block from that original triple bottom. You know what I mean? So like
Yeah,
propulsion blocks can happen on multiple time frames. Like
yeah.
um,
This would be I would consider this a propulsion block because you have your order
yeah,
block,
within the smaller time frame. Yeah,
price runs away from it,
totally.
price comes back down into it, and then this candle body closes above these, and then price dips back down into it, and then boom, really rockets away. And so it's not, we've already gotten into the order block right here with this candle, hits that order block and really runs away again, and then uses this as the propulsion. Then your next hours are just price jamming up there. It's really nice delivery.
And that failed swing creates a big point of interest for us.
hmm your failed swings are engineered. That's engineered liquidity. So when we create these failed swings on purpose, or the algorithm does, so that they can be taken
Lots
out later.
later.
Yeah, because that's people are gonna be like, oh yeah, cool. I'm gonna put my stops up here. Look at how much prices come down, and that happens on all the time frames.
And it's easy just to look at that segment of price and being like, oh, we're in bearish order flow, right? Like this thing's going to continue to go down.
Yeah, we're gonna balance this.
Yeah. But in reality, because of the expansion from that triple bottom, that's an order block.
Mm-hmm.
That's a confirmed order block. So it's gonna, when it comes back to it,
Yep.
that's that's what you want to be paying attention to is price gonna respect this area in reverse, or is that order block invalid?
And then this is your change in state of delivery.
Yeah. So you get plenty of entries there once you confirm that state of delivery with that dip into the hourly fair value gap.
We're starting to get into broken up price action back there. But yeah, typically when you get four candles in a row and it's very boxy, that's like your change in the state of delivery. And usually you get some sort of like low resistance liquidity run. So here you have candle bodies that are creating lows. This comes back down, just rebalances this whole thing, and then you get your run on the highs right here. Failure swing and still needs rebalancing. So even like this right here, look at where like price comes down into. It's completely rebalancing. So all this movement is just to continuously rebalance back and forth till it rebalances to where it wants to get to. And so this could be like a higher time frame failure swing on this. So if like we're looking at like this as a order block up here, up close, price runs away, wicks up into there, and then boom, runs away, keeps moving down. And now we get back up into that order block and price runs away. That's this would be a failure swing on this range right here. Because if it was bearish order flow, then we would see price move to take this out coming from that order block. But really just goes into an area of discount. And that's why when you throw up your fibs, that's it's important to do that on these larger time frames. That way, when you see price start getting into your discount versus premium, start looking at how these candles are forming. And you can see the engineered liquidity put in with these failure swings from this one, and then eventually takes out this. So you're kind of meshing all this stuff together. And then really what we would want to see is if we were going to see price continue to move lower, you see the swing low of these hourly candle bodies. Notice how none of these candle bodies take it out. And so that's something that you can study on the 5 minute. Just like this would be a swing low on the hourly. Okay, swing low comes up. So we have candle bodies right here. Up, these candle bodies took these candle bodies out. It comes back up into this order block, rebalances, and then now it drives down. So we're hunting that kind of stuff on once areas of interest are taken out. We have run on liquidity, and we have a move back up into this order block, and the rest of this got rebalanced. Negates that one and comes back up into this one where price actually really rejected and then ran away. What does it do? Creates equal highs right here. But the candle bodies, okay, take these ones out. Okay, there's your run on liquidity. These candle bodies take these hourly candle bodies out, but they do not take these ones out. And that's how we can be sure that price is going to look to rebalance. Okay, we don't run these ones. And you can see it all different swing highs and swing lows. So if you get stuck on lower time frame, zoom out a little bit. This is the example we gave before. This little swing high, this liquidity gets run by these candle bodies, and then now it starts to hunt these ones.
Your long is ripping.
As it should, because we got to take this out right here. So initially, I was thinking that here was the monthly fair value gap was like right here or something. And so here's kind of another four. We had a nice little four candle setup. Um, and I look at this as a four candle setup because we have two candle bodies that are relatively close, and then we have another run on these candle bodies, and this wick held this wick. And so we did get a nice move up after that. Um, and I had some good longs that day. There are two on paper. I think on some evals too. And so I was looking for price to continue up here. Well, it gave us one more dip into the monthly fair value gap. And so here's that swing high. So this should have been the telltale sign when this candle broke this and this next one was like a doji. And you can see on some of these other three candle setups where that middle one's kind of like a doji candle. Where are they at? See doji candle, you get like a wick, but it's a very small body. That's that up and down, like stabs up into liquidity and comes back down. Okay, smaller body compared to the other two. Runs up, runs liquidity. Small body. Okay, so that's what I'm gonna kind of work on next is that three candle setup. So that should have been the sign, this tiny little candle body that, oh, and then what does it do? The wick just runs these highs and then boom. So I actually got into a short on that, and then you have your four candle setup here. London, 4 a.m. Just the rebalance comes back down into this order block. Candle bodies respect mean threshold. We actually dig into midnight open down here, and then boom. So just going over hopefully this helps you guys. I think the 1 hour chart's a good chart. Just trying to go over like reading PA and reading um, the actual bodies of the candles and focusing on that because that's going to tell us the story. And when you see, price closing with the candle bodies below other swing low candle bodies, then that should give you a kind of a better sense of um, where price is going to head next, especially on the hourly. And so if you see it on the hourly, then you should somewhere on the 5 minute chart be able to get yourself into a play in the right direction. And you can really just target the closest liquidity if you're unsure, or at least take profits there and you know let a runner go. But an hour is a lot of time, and so when these setups form, it should give you enough time to find some sort of entry in a good spot, and there should be other confluence to go along with it. And so I know for myself, I get if I get tuned into the 1 minute, I really start to do poorly in my trading. Like if I get too zoned into the 1 minute, my win rates drastically drop. Um, my view on price isn't as good. So the other week I had to remind myself like, yeah, you can get some really dialed entries in the 1 minute, but for the most part, like 5:15 in the 1 hour should be your go-tos, and then just mark out your monthly, weekly, daily 4 hour stuff. 4 hour stuff when you kind of get into like daily, weekly points of interest or monthly points of interest and you want to dial it in. That's what the that's what I was looking at down here. 4 hour equal lows, and we just tap below that, but um, created equal lows again. So I'm sure eventually we'll return there. So this will be interesting in the next 30 minutes. This is a 4 hour candle. We'll see where we close relative to these 4 hour candle bodies. And you can do this on the 4 hour chart too. Just looking at where candle bodies close relative to other 4 hour. So like right here, ICT went over. This was the CE of the daily wick, I believe. And so all these wicks up in there, all the candle bodies on here, and then boom, candle bodies have to take out liquidity. And there we go. 4 hour runs it. So you got 8 hours, and then this is kind of a nice little telltale to be able to get into something short since we ran this liquidity. Anyone have any? Yeah, that's right. Just say no to the 1 minute. Carmet, I recorded this whole thing, so I'll upload it and post it. Anyone have anyone questions or anything like that? Just trying to go over more PA. I think
Hey,
it's good.
dude, I really like your note on going back to micros um, after funding an account and then getting rid of the threshold of micros. That's a really mature note. I wrote that one down in my journal. That's really good. And congrats on the 25Ks before vacation. That must feel awesome.
Yeah, we'll take a couple. Apex, it's 7 days, right?
Yeah, 7 for evals, 10 for payouts.
Yeah, okay. Because I think ETF is 5 days for evals, but nonetheless, yeah, dude, I got to remind myself of that stuff because it's like I fuck myself on the other side of the
No,
emotional
dude.
part.
Yeah, because you think you're the fucking man. And you're like, all right, finally fucking dig in, start getting these payouts. I'll pay myself bi weekly, start romping, arranging the spreadsheet. Next thing you know, the unrealized gain sweeps out your fucking funded account.
Yeah, then you're just defeated. Anyone else? Any questions or things you want to go over?
Just a comment. Brilliant stuff, dude. Thanks for doing this, Aaron.
Yeah, thank you, man. And if you guys aren't aware, haven't seen, DJ's posting a bunch of currency merchant stuff, um, and his YouTube videos, and he kind of gives a little more detailed in his videos. Dom was talking about how he is into the core content from ICT and learning how to read price action and thinks that that's all you need. And so there's some good stuff in his YouTube videos about price action reading and all that stuff. So that was kind of my latest what I've been working on for the past, I don't know, four months now, is just reading raw price action and understanding candle bodies and wicks. Because if you can do that, then it really, like, all the other stuff just gives you confluence. So look out for all the stuff that Dom posts on that. It's good stuff. All right, I'm gonna shut off the recording. Unless you guys got anything else you want me to go over. Oh, thanks, Carmena. Yeah, it's just me and the wifey.